All right. Good morning. Just a bit of a pre-market rundown on GME here, and a couple of the other meme stocks. GME's really started to tighten up again. It's extended its tightening over the last day. This is dropping down into liquidity as market makers are finding it difficult and are having to reach for the ask, and that's tightening the price, and that's where we see this causal liquidity happening in a squeeze that's been caused by not enough liquid in the underlying. If we go and have a quick look at what's happening in the charts today, GME's had its buy signal bought. It's had a great buy signal during that dip. Come here. We can see we've got this big, strong. The green line is the buy signal. It's had quite good DPI, but the buy signal is nice and strong. There, basically, as it's come down into the dip here, the DPI's held on. There's been no real selling. There's been just a bit of the gamma's dropped, and the ND buy has gone. And the DPI has gone down because market makers are having to hedge puts that have been bought. If we have a look here, there's the long dated options. We've got a lot of out of the money calls being bought again, and we've got strong in the money here. It's delta goes up on the outside of this matrix, and here we've got quite strong underlying out of the money puts. And if we have a close look, we have a lot of them in the short dated relative to what we have in the long dated, and that's just to get that sold put gamma pushing the market. Let's just have a look at that. As you can see, most of them aren't. Most of them are in the out of the money positions. Now let's just go and have a look. I was asked to have a look at Siri. And Siri's had a couple of really good builds of DPI. This one, a lot of this is just hedging, and then as it's fallen down, we've got a buy signal there. We've had another really good buy signal there. We've got really strong IV, which is suggesting that the market makers are upping the price on their options because they're finding it hard to buy the underlying, which is why we've had such tightened liquidity here. And this is in the longer dated. We can see it's a very even positioning, and it's what I would expect if we just had a quick look at that on the 50 delta, which is the decision whether something's going to be long or short. It's reasonably strong, and we've had quite good accumulation in the last few days. If we just go and have a look then at what Siri looks like on the chart, we've had a split here. A lot of this heavy gamma here is probably to do, and this price action has got to do with the split and the market makers controlling that split and the options being run around them. We've then had reactional liquidity here, and we've had a little bit of bounce. Then we've got to a higher position, and then because we've had this higher looser liquidity, we've had a reaction to the downside, and it's tightened. But since it's tightened, we have now had quite a lot, as we saw in the DPI, of buying of the underlying and tightening it up. So we've got quite good causal liquidity tightening here, and it's continued to tighten, and I think this one is just about to fly. Let's just have a quick look. I don't know, the CX app it's had this great tightening here at the same time that we saw GME, and that was caused first by high gamma. This section's high gamma, and then this big blast here is by this release of VANA into the market. I don't know that we've got that happening at the moment. We've got quite a lot of hedging around the big the mags and around earnings, but it's not going to be anywhere near the hedging that we saw in this event here in April, and that's dissipated out. That doesn't mean that these stocks aren't going to start to run. A lot of the smaller ones are starting to run. It's just that this was a double-headed event. We had a Gamma event and then we had a Vanna event. So that one's looking pretty good. I took a position in this yesterday. I agree with Jake from Twitter that this here is reactional illiquidity, and we've had a little bit of a bounce, but it's kept very under control. And then we've had a really great increase in illiquidity here, and obviously some great buying of the underlying. And if we just have a look at that, just check that I've got it on the right screen because I've stuffed it a couple of times and had to retake this. So here in Celsius, let's see what its data says. Here in the short dated, it's still got quite heavy hedging in the short dated. I think most that we'll find is in 30 days. In 7 days, I don't think there's anything there. So yeah, it's really pulled back. We haven't seen it since its last top. We haven't seen it so low. And then if we go, I think that it's just got a buy signal come in after yesterday being pushed down a little bit. Let's just see what the long term. Yeah, we've got reasonable DPI here, building. We can definitely see it a lot more in the liquidity around the stock. It's the liquidity in the TV rather than here. It's not as great action here. Yeah, there's a few mounds here of DPI. It's definitely strengthened here in this last little period. We've had around this sort of 65 mark, which is really good. What were the other ones that I was just going to have a quick look at? Actually, let's I think it's BB. Let's just have a look at BB. There's some interesting charts there. I think it's BB and Chewy that I wanted to have a look at. So BB here, this is interesting because we can see it more in Chewy, but it's got to do with gamma ceilings, and you can see here we've had a great buy signal in the bottom of here, and we'll go and look at the TV chart in a second. It's had really strong periods. We can see up here we're up in the 60s, and again we've had another build here of DPI. As expected, as the gamma's risen, the buy signals have fallen off, but we've just started to get some buy signals again as it's been rising with price. But it's just notice the grey here area is not going up anymore, and that's allowing it not to bang into the top. And if we have a look at that, in this chart here, BB Blackberry, we can. Are we in the long dated? No, let's go in the long dated. Oh, we can go in all probably. We can just see it slowly turning down. The colouring here in the calls. You know, here we've got 2030. By here we've got 1980. So they're just reducing it slowly, and they're just rolling those calls up. And what that means is that the market makers aren't having to constantly hedge, and when they're constantly hedging and it's more and more rapid, it slows the stocks down. We get into a high gamma situation, and the market just won't. The price won't rise. We don't get price discovery to the north. And if we just went back and had a look at what was. I moved a bit too quickly there. If we have a look, we're sitting around this 110 to 115 level now, and that is just allowing. That's what this top here. That is what is just allowing this to stay flat and to keep rising, but the gamma to stay flat. I was looking at this in Chewy for another customer. And I just thought it's an even more interesting gamma ceiling. Maybe it shows up. So here we've got a constantly rising price, but gamma is actually reducing or staying reasonably low. We've got good buying in every dip here. We've had a great buy signal there, and the bottom in Chewy was just a fantastic bottom. It was just so incredibly strong. You have a look at this DPI in here. And then because we haven't hit a ceiling, we've hit a ceiling here and that's knocked it back down. We've hit a ceiling here, it's knocked it back down, and they've learnt and they're reducing it. And you can just see it so well here in this 15 NDM matrix. It's just an easy one to see. I don't know why it doesn't turn up in the big one. Maybe I've just gone too far out. Let's go to about the... see what this does. We can just see this just slowly rolling back. But if we actually look here at the number at the number of call positions at that 0.5, it's sat there for a long time at high 30s, and it's just slowly ranging into 40s and then 50s. And all of the time, if we look at any of these periods of time, we will just see this slow leaching of colour. It's just slowly rolling off, and if we get up into that top one, just the last apex, if we just have a look at the top month again of January, we can just slowly see this colour just rolling off, and it's just that the actual number of options is staying the same, and that reduction of gamma ceiling and the rolling out of options is that real gamma ladder effect. So the gamma is not stopping it at a roof position. Now it's still got, it's not banging its head against the roof. It's still got room to move. So here's BlackBerry here on the chart, and you can see this was this rising here, but gamma has flattened out, and so that's being allowed. So we're getting this rising flag. Is it going to stop? Well, it will stop if we start to see some that gamma rising again, and it will stop if we start to see some puts being put in place. But we haven't seen any short-dated puts coming into place either. Here, the Chewy chart, it's just screaming. It's almost looks as though, and it's that well controlled that it may well go. It may well turn into a a convex breakout and go parabolic. Here liquidity is managed to stay rather than rising because the gamma is coming off. This is the effect that we can see of this low gamma. You can see this incredible build here through this bottom, through this basing formation here. Great, just so tight as it came through the bottom, and that's given it all this drive. These tools, you can get them all at Naked Delta. Both the matrix, you can learn to DIY it all yourself. You don't need me boring you with short videos. But if you don't want the matrix that supports all the information, you can get all the information here from TV, from TradingView. All you need is probably there, but it's really nice to have more than that. This is Celsius Holdings. I took a position in Celsius Holdings. I see Jake, who everyone in the world follows, for his TA. I follow him because I find it interesting how well he markets and how badly I market. I'm new to the game, but he does a very good job. Here we have reactional liquidity, and this is building liquidity. And if I took you off, you would agree. I took you and we had a quick look at that, but I'm not going to bore you going back into the matrix. We've seen it tightening again here. I think that this is probably a good candidate to be held in longer dated calls or in stocks, so you don't get theta burn. Beyond, I think Beyond's just going to go off. So I took a shorter position, only 3 or 4 months in it. If it's sitting there and I'm getting theta burn after a week or two and I don't see this resolving, I'll be out of it. Again, this has had a big build through here and tightened it up, and it's had a blow off in July. It followed basically the pattern that we saw. Oh no, it's had its own it's had a little bit of it. It's had a bit of May, but no, it hasn't been in time with some of the other events we've seen. and now it's building its own set of events again. This is reactional liquidity as this has fallen off. So we get this, it's dropped into a very illiquid place. If you're in a topping position, it's very liquid, then you drop, you get reactional liquidity, and then that we've had that reaction back and it's just been soaked up. The price really hasn't moved anywhere. And then that soak up of price is probably because it was very well hedged, and then it's dropped into, and that's what we saw in GME. We didn't see a lot of tightening in GME, or we didn't see a lot of DPI changing in GME as it's come off its recent sort of mid-30s back down to 27. This here is a wonderful, this is buying of the underlying, tightening the market up, and I just think that this looks like it's ready to fly. Well worth taking a small position in. I think I did just yesterday take a small position in it. We've looked at BB. There's another candidate I've got a position in. I'm not certain about it, but I don't like it in the 30 minutes. It's not a great looking chart. This just looks like it's leaning over too much for me, but it looked like it was leaning over too much there and it took off again. We can see the liquidity is really tightening here again, and in the bigger picture it's really sort of held its liquidity together. We'll go out a little bit. It's really held its liquidity together here. Yes, it has risen, but it's coming from a very low place. It's had a very good build, and it is rising up. This is a really good build here of the underlying, making it illiquid, and I think it's about to take off. I've got a position and I'm hedged. Going through this, we were looking at this in yesterday's video, Faraday Future Intelligent Electric. It's had several events and several splits. If we look post this recent split, it's had a lot, or the market makers have had a lot of issue getting the gamma right in it and settling it down, and that has made it a little bit of a candidate for these sorts of plays. And we've had a lot of buy of the underlying. I don't know if it's because it's cheap price and they're manipulatable. I don't know. Is that a word, or is that just one that an Aussie makes up? To manipulate it, is it able to be manipulated? But here again, we've seen it drop into liquidity. Now, I would have thought that we're just going to see it form as it has previously. If we look at this this most recent little pullback, we saw these couple of events going into it taking off. It's headed down and then it's bounced back up. It gets a reactional liquidity. So I would say that these are reactional liquidity, and then it's charged. It's had a lot of, as we looked at yesterday, it's had good DPI there. It's had very good DPI. We'll just have a quick look at that on the other screen. This is just to reiterate what we were looking at yesterday. DPI is dark pool interest. It's buying in the OTC market, over-the-counter market. It's not done in lit markets, but all sales by exchanges in dark markets have to be reported to FINRA at the close of trade, or at 4:45 I think it is, and those figures are put together and we make this nice bit of data that the idea was sourced from a great guy called Matt Zambito from Squeeze Metrics. So this shows us volume of, and we can discern whether it's buying or selling volume, and as you can see, this is buying volume. The thing that really interests me about this, we've got a buy signal here, a great buy signal, and it's just coming because we've got rising illiquid here in the IV. The IV is really tightened up because the dealers are finding it hard to buy the underlying to cover themselves. Again, you can just see this IV rising here, and with it we've had a buy signal. We've got DPI, we've got another buy signal here with low gamma, more DPI, and I just think it looks like it's charging, even though it's probably going to go up and down. Again, it's probably a candidate, and one of the clients, Navinda, was holding it with shares, and it's a sensible thing to do. The price movements aren't that large, but the theta burn, especially if you're buying out of the money stuff over a long period of time, you can lose your position size very, very quickly, where you're probably much better off in a stock and a small number of the stock, and then you get full value, and you're not suffering any IV at the other end and losing your money if you sell the stock at the wrong time, because the manipulation, well, or just the hedging that the market makers are having to do. Let's just have a quick look. We'll go back. We looked at this one yesterday. Great looking stock. Reckon that's going to fly. This is charging itself up again. We can see that this liquidity has dropped again, and here it's going in. Let's see what it does. I don't know if we're going to get the same sort of blast off that it got. Let's have a look. I don't know if we're going to get that same blast off that we saw in September, but it's managing to hold the top of this volume node at the moment and looking good. I haven't been following Trump's media group. Doesn't look that bad. It's got tightening liquidity. The whole market in this tight end of it looks like we might get a bit of a Vega, a bit of a Vanna event coming out of the back of the earnings season at the moment. I'm not so certain about this one. I own this one. I might close it today if it goes down. It is hedged. I did like the chart. I don't know if I looked at the liquidity enough. This is reactional liquidity to start this off. So this first bump is reactional liquidity, but it actually, I sort of bought it here and it looks like it's just tightened up more than it should have. It is deeper into liquidity, but it's coming from a very high price, so you would expect this to tighten up because it's fallen into the liquidity, into illiquidity. Yeah, I don't think much of the lithium market at the moment. We've looked at GME. AMC is looking quite tight again. I don't know. Looks a little bit dead. AMD is looking a lot better. AMD has fallen into, whether it is reactional liquidity or not. I think it's probably more than reactional liquidity. This is sort of reactional liquidity, these drops here. I think that it's really charging itself up again. Interesting. Anyway, I hope that you enjoyed that, and just remember you can get all this stuff at Naked Delta. Follow us on Twitter. Like the stuff if you like it. You can get the whole package, or you can just get the indicators. There's better alpha in these than anything else, unless you just want to take other people's advice. But here you can self-manage it, and you can check the advice you're getting all of the time. Anyway, you have a great Friday's trading and a nice weekend. Thank you.